So I love your 10x brand. It's perfect for Bitcoin because I believe Bitcoin has a 10x in front of it here in just like the next 5 or 6 years. And I have the math.
10x from here.
10x from here. Yeah. I mean, I put it around $1 million, right? 14 million by 2040, 50 million by 2050.
Wow.
And I think that might be bearish. And here's where I came up with those numbers. We buy a lot of things, but at the end of the day, wealth is the goods and services that we buy. And what happens is after we make our money, we typically park it somewhere. So we have what's called store of value assets, real estate, obviously, right? We store our wealth in real estate. We store our wealth in equities. We store our wealth in bonds. We store our wealth in gold. We store our wealth in collectibles, fine art. And if you add up that basket, those store of value baskets, it's about $1 quadrillion today, 1,000 trillion.
Imagine a world where you could protect your wealth from endless money printing, participate in a global financial system without permission, and leverage cutting-edge technology all at once. That vision is what drew Mark Moss to Bitcoin. Initially motivated by a desire to move money out of the traditional fiat system and explore citizenship options abroad, he discovered that Bitcoin solved the very problem he was trying to address. Unlike gold, which serves primarily as a hedge against monetary debasement, Bitcoin combines that protection with the benefits of a digitized, decentralized financial system, transforming him from a traditional gold bug into a sound money advocate who sees Bitcoin not just as a hedge, but as a revolutionary tool for financial innovation and growth. He elaborates that while Bitcoin and gold share similarities, both serve as safeguards against inflation and money printing, they differ fundamentally in their narratives. Gold is often associated with a doom-and-gloom scenario of economic collapse, while Bitcoin represents a more optimistic, tech-forward solution. It is not merely a store of value but also a protocol, a decentralized system that routes value in a similar way to how the internet routes information. Unlike the thousands of altcoins, which function more like private companies with centralized control, Bitcoin is open source, permissionless, and available for anyone to build on, making it a truly revolutionary digital commodity. Mark Moss also addresses the broader implications of digital tokens and lowering friction in economic transactions. Too many individual tokens create unnecessary barriers for participation, making users less likely to engage. By contrast, Bitcoin's established network and liquidity reduce these barriers, enabling smoother, more widespread adoption. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Get money out, and then I could work on citizenship there and stuff. And I took another look at Bitcoin. Of course, I had heard about it years before. And I took another look at Bitcoin and I thought, wait, this is the same thing I'm trying to do. I'm trying to get money out of the fiat banking system. And so I understood the problem I was trying to solve. And so then the solution of Bitcoin became very clear to me. And then I very quickly realized that I'm not a gold bug, I'm a sound money advocate. And so that was sort of my first entrance into Bitcoin, coming at from that angle.
Just in case.
You understand Bitcoin now, so you understand gold. It's the debasement trade, right? JP Morgan came out with that article a week ago called the debasement trade. So governments keep printing, gold and Bitcoin keep doing great. There's differences. There's something that's common. There's something that's different. So first of all, what they have in common is that they both believe that, they say there's two things in life that are certain are death and taxes. The third thing is money printing, right? Governments are going to continue to print money. And so as long as they continue to print money, you'll need to buy assets to protect yourself. They'll go up in value. Then the question is, what asset do we buy? So that's the gold narrative, right? They're going to keep printing money. So gold is real money. We're going to buy real gold, right? Or real money, which is gold. So that's what they have in common. Bitcoin is also a debasement trade. As they keep printing more money, then we can protect our purchasing power in Bitcoin. So that's what they have in common. What they have different is that the gold narrative, unfortunately, is very doom and gloom. It's like, there's this Mad Max scenario where fiat crashes and you better have some gold in your safe to barter on the street. And so it's all based off around doom and gloom, which I don't like. I don't believe in that world. I believe in prosperity. I believe in abundance in front of us. We just have to, again, change our strategy. And so Bitcoin has that protection, that hedge against debasement, but it's also a tech play. It's also it's a digitization play, right? It's a digitization of capital and credit, and so it's also like a very positive, healthy growth message, not just a doom and gloom message. Yeah, well, first it kind of came back from, like I said, I understood gold and I understand the problem I was trying to solve, and that's what got me in originally. But the aha moment for me was when I realized that to the point that you just brought up, all of the problems with gold that were there that prevented it from working in today's information age were solved. And I thought, all of a sudden, we finally have a tool that we can change the world with. Like, this is something that instead of just like being a libertarian and like hoping people get better, we now have a tool that we can change the world. That was sort of like the big aha moment for me. I will say that I then, because I have this tech background, I sort of fell down this rabbit hole of, it's not Bitcoin, it's blockchain. That's the revolution. And then I started writing a cryptocurrency research newsletter, and I started publishing research on all the cryptocurrency projects that were out there for several years. So I started doing that. And after about 4 years of publishing research, probably 1,000 pages of published research on every project, privacy coins and decentralized exchanges, et cetera, I kind of then came to the realization, okay, none of that matters. It's only Bitcoin. Yeah. So like in 2016, and at the end of 2017, sort of Bitcoin's first big bull run that people paid notice to, there was about 2,000. Today, I believe 2,000 other coins, altcoins. Today, there's on CoinMarketCap, there's like 19.5 million listed.
19 million coins.
Yeah, 19 million coins. And the problem with them is that, I mean, there's a lot that we can go over, but Bitcoin is a commodity. So it's a protocol. And what do we mean by a protocol? It routes packets of data, like the internet routes packets of information, TCP, IP, like your internet protocol. It routes packets of data. Anybody could use it. Anybody could build an internet application on top of that protocol. Nobody owns the protocol. It just routes packets of information. Bitcoin is very similar. It's just a protocol. So all it does is route packets of information. Nobody owns it. Nobody controls it. Anybody could build on top of it. Whereas the other 19.5 million cryptos are private companies where a group of people have come together to develop it, build it, and have control over that. And so they're more like an equity. They're more like a company versus Bitcoin sort of being this protocol commodity. Well, I think what Trump wants to do through some of the executive orders that he did this year is make it much easier for businesses and people to raise capital using digital tokens. And so instead of making you go through 3 years of, public registration process, millions and millions of dollars, like why not just allow small businesses a path to just go raise money? And potentially, artists or maybe someone like you could sell tokens for like a fan club or some other way. Why should you do that, or why shouldn't you? Why shouldn't you do it is because as a business owner, this, you're a sales guy, our job is to lower the friction that it takes to bring somebody in, right? So let's say that I'm at Dave & Buster's, the video game place, right? And I'm there, I got to meet somebody in like 15 minutes and I'm just like waiting. I'm like, I'll just play a game. Oh, they're $3 or $4. That's great. Oh, whatever, I'll play. I don't care. $3 or $4, right? And I go to put money in. Oh, but they won't take my credit card.
Right.
So I got to go stand in line over there and buy this card and put money on it. And I'm like, screw it. I'm not going to do that. Right. So they created too much friction and it prohibits me from taking action. I would have given them some money. I might have dropped $20, $30, but now I don't. And so what we want to do is we want to lower the friction. And that's why having one universally accepted medium of exchange that has enough liquidity matters. If everyone has their own token, if I have to buy this token to interact with you, I don't know if I want to do that. And I'll go to somebody else who doesn't make me buy the token. So that's why you shouldn't do it. So there's pros and cons.
The Bitcoin market has experienced extreme leverage, with some positions magnified 20 times, driven by low volatility since ETFs became mainstream. This complacency is mirrored in broader markets, such as the S&P 500, which hasn't seen a single 1% drawdown since August, creating an environment where traders feel emboldened to take excessive risks. Despite short-term fluctuations like an 8% drop on a single Friday, Mark Moss stresses that Bitcoin's core fundamentals remain strong. Its security has not been compromised, and it continues to act as a hedge against monetary debasement. Over the past 2 to 5 years, Bitcoin has grown hundreds to thousands of %, demonstrating resilience and long-term potential despite periodic volatility. Looking forward, Moss projects that Bitcoin could achieve a 10x gain over the next 5 to 6 years. His analysis is grounded in the growth of global store of value, assets, real estate, equities, bonds, gold, and collectibles, which currently total around $1 quadrillion and could expand to $8 12 quadrillion by 2040. By applying historical growth rates, global liquidity trends, and government deficit projections, he estimates that Bitcoin could capture between 1% and 8% of this expanding market. Even a modest share would translate into trillions in value, highlighting Bitcoin's transformative potential. Let's get back to the interview.
And then what they're doing, Grant, on top of that, is then they're chaining them together. So now I've got a 20x position on this one, that's a 20x position on this one, and now they've, done that 3 times. The amount of leverage that was built up in the system was insane. And what I would say is it's a bigger symptom of 2 things. So it's a bigger symptom of 2 things. Number one, the entire Bitcoin market, the volatility has decreased since ETFs went live a couple of years ago. And so we've seen the volatility compress down, but also the volatility across the overall market. So the S&P 500 hasn't had a single 1% drawdown since August. Like, that's unheard of. And so what that does is it creates complacency, and then people start adding that leverage in there because there's no volatility. And so the complacency led to that. So it led to this too much leverage built up in the system. So cleansing that out is kind of a good thing overall. Number 2, what I'd say is that we can see that the world today is highly over-financialized and over-leveraged, where one random tweet can literally send the market down, and then another random tweet on Sunday night brings it back up again. Why did I buy it? Well, they're going to build a football stadium. When? 7 years. Okay, so 7 years. Is it still intact, right? Did they have the plans, the permits, the funding? If all those things are true, then I don't care, or maybe I buy the land for cheaper, right? Now, if I discover that they discovered nuclear waste, I'm like, oh shoot, sell the land at a loss and just get out. And so that's what I'd look at. Is the reason I bought Bitcoin, is that basis trade, that debasement trade, is it still intact? Did Bitcoin security fail? No. Right? So then I would hold, and I could look past that volatility. And if we zoom out a second, over the last 2 years, Bitcoin's up 300%. Over the last 3 years, Bitcoin's up 400%. Over the last 5 years, it's up 1,000%. So on Friday, it dropped 8%. So I love your 10x brand. It's perfect for Bitcoin because I believe Bitcoin has a 10x in front of it here in just the next 5 or 6 years. And I have the math.
10x from here.
10x from here, yeah. I mean, I put it around $1 million, right? 14 million by 2040. 50 million by 2050.
Wow.
And I think that might be bearish. And here's where I came up with those numbers. We buy a lot of things, but at the end of the day, wealth is the goods and services that we buy. And what happens is after we make our money, we typically park it somewhere. So we have what's called store of value assets. Real estate, obviously, right? We store our wealth in real estate. We store our wealth in equities. We store our wealth in bonds. We store our wealth in gold. We store our wealth in collectibles, fine art. And if you add up that basket, the store of value baskets, it's about $1 quadrillion today, 1,000 trillion. Now, a decade ago or 15 years ago, it was 300 trillion. Today, it's 1,000 trillion. Why is that store of value basket growing so big? It's because of the money printing that's going on. So not just the US, but we look at total global liquidity. And so we can see how much total global liquidity has been rising. And then we can measure that by the store of value assets getting bigger and bigger and bigger. So what we do is we take a historical CAGR, compounded annual growth rate, of those store of value assets. And then we add in, and then we compare it to the money supply increase. And then our own government, the U.S. government, the CBO, Congressional Budget Office, they publish what these numbers will be for the next 30 years till 2054. So they tell us what they think the deficit spending will be, the total spending will be, the debt levels will be in 30 years from now. So then we take those spending levels and we can sort of extrapolate that based off of the past and the forward, and how big will that store of value bucket get? And by 2030, that should be about 1.6 quadrillion. By 2040, that'll be about 8.5 quadrillion. And then the question is, then at that rate of growth, how much of that basket does Bitcoin get? So I believe that by 2030, it gets to about 1.25% of the basket. And by 2040, it gets to 8%. Now, let's just check those numbers real quick.
That's 12 trillion, somewhere around.
Yeah, it's 21 trillion. It'll be 21 trillion by 2030. But is that realistic, right? So if I was pitching on Uber or Airbnb 15 years ago in Silicon Valley, I'm like, oh, it's going to be worth, $300 million. You're like, where'd you get that number? Well, Uber, taxis and limos, if I can get 5% of those markets. So Uber and Airbnb both captured 10% of their market in less than 10 years.
Bitcoin's unique position as both a hedge against monetary debasement and a decentralized, technology-driven asset underpins its long-term potential. Despite periods of extreme volatility and excessive leverage in the market, its fundamental security, scarcity, and broad adoption remain intact. With global store of value assets projected to grow exponentially over the coming decades, even a modest portion captured by Bitcoin could translate into trillions of dollars in value. Its resilience over recent years, combined with the expanding digital financial ecosystem, positions Bitcoin not merely as a speculative asset, but as a transformative tool for wealth preservation and participation in a global, digitized economy. How might Bitcoin's role as a digital store of value evolve as global liquidity and traditional store of value assets continue to grow over the next few decades? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.